Hi, I'm James Goulsbra, and I'm joined by Amy Hancock, and we are Being Counted the Boss podcast hosts, and today we're doing a video series on how we do and what we do.
So today we're going to be talking about how we prepare year-end accounts and tax returns. So first of all, software. What are you using to prepare your year-end accounts and tax returns?
We use Hancock.
Okay.
Yeah, so for us, it works really well.
Yep.
I think we spoke about on the podcast about we use our elements of tax calc with the practice manager stuff, and it was great because you put the stuff in, it feeds into the accounts production, tax production. We also outgrew the practice management, but we still use the accounts production and tax returns because we feel it's just brilliant. It ticks the box for us.
Exactly. It integrates with software that we're using, so I can pull in the trial balances from QuickBooks from Xero. I do most of my accounts work within the software.
Right.
As in the software being QuickBooks or Xero, and then import last minute to tax calc. Still need to then move some stuff about. There's always something I've forgotten to move, or the category isn't right, or split something. So I always need to do that, and then I can reflect that back in the bookkeeping software. But I just find it easier that doing the work in QuickBooks or Xero.
Yeah, I mean, for us, we have working papers. So we will take, because majority of our clients are doing the bookkeeping and the VAT reviews. So a lot of the work is done in the year. I'm going to talk about another episode about advisory. So we do a lot of stuff already. So for us, the bulk of the work is done in the software and it's pulled out. Yeah. Sometimes it's not as the case. So we will put out the trial balance and create an ETB in the working papers. We obviously have staff that are training. It's good for them, so they can document their journals. Yep. We can obviously monitor when we're reviewing the work. You know, you've got your final ETB, that's plugged into tax calc. Anything that we're working in the working papers, we're adjusting in the software.
Okay.
So we're not doing the traditional, the old-fashioned way, which you do the work outside, and then you dump in a balance sheet journal once it's all signed off.
Opening balance adjustments.
So we are doing it. So we're going along in like Xero might find a recode stuff. Obviously in QuickBooks we're quite just able to go in and edit the transaction to move it. And same with free agent. So the final trial balance that we're making the accounts from, the trial balance, the software replicates it. So the P&L and the balance sheet replicates exactly what that trial balance is used for the accounts that's in tax calc.
And then are you doing the import to tax calc from QuickBooks or Xero the same way?
No. So yes, sometimes yes. Yeah. And then other times we've plugged it in from just
in Excel.
Yeah.
Wow, so you do have a bit of Excel.
Yes.
See, I don't do that. See, were you talking about how you're doing the working papers? So for me, my practice, I am the person that mainly does the accounts.
Yep.
I've got a team of bookkeepers.
Yep.
But I do the year-end accounts. Mm-hmm. So I have to an extent, ditched my Excel working papers, which I feel nostalgic about. I created, in my old firm, I created the working papers that we used, fixed assets starting with F and working your way through. Yeah. But because I know what I'm doing, I didn't feel I needed to do it. Now that I'm potentially having one of my bookkeepers moving into the year-end account space, I think I'm going to have to revert back to working papers for a training.
Yeah, that's the point. Where it's myself and other James, we were doing it, we're predominantly doing the work, and now we're got team around us. It's important that they get to see what we've done, hence why we did the working papers. Yeah. Otherwise, the knowledge is with myself or other James, and that's, I might not be here, I might be in a client meeting, and then we're just holding things up. So the working papers are there so people can just pick up and go. But equally, we're making sure the software is replicating the trial balance
as you go along,
because we're doing the work. There's no point doing all this bookkeeping and the VAT reviews, and then it comes to the accounts and doing all this amount of work to produce a set of accounts. You're doing the work in the month, so you should be able to get it out, the final tweaks that need to go in, the final checks of it's the FRS 102, the disclosures, are they correct? Yeah. Present to the client, compliance done, move on to the next bit.
Yeah. So are you storing those working papers in SharePoint?
Yes.
Fine. Because there is something that I'm going to be doing. I'm going to be storing my work papers within QuickBooks.
Well, you use QuickBooks.
QuickBooks work paper. So I think the fact that I haven't been doing them, I've obviously been doing a working paper if it's a loan and you need to calculate the interest.
Yes.
Or I've got a fixed asset register, even though actually there's some of them I probably don't even have a fixed asset register because they're stored within QuickBooks.
Yes.
I talk about QuickBooks because that's predominantly what I use. So I'm very familiar with where things could sit. So I will have the odd working paper that I can then drag and drop into the journal.
Yep.
And that's where they're stored. They'll still be in SharePoint.
Yeah.
It'll be Excel. I'd love a bit of Excel. So I probably will have working papers is in a hybrid rather than an actual file. I mean, I have still got my template. I'll see how I go. But I will always import from QuickBooks.
Yeah, well, it makes sense. If you're doing, again, that for us, it's something I think we're going to honestly have to look to bring in as just improving a process to be efficient rather than having to do the work all in Excel and you've done the work, you want to go and put it in. Because sometimes the Excel into TaxCalc doesn't work as well as the import from Xero QuickBooks into TaxCalc, and therefore you have to do.
It's the mapping, isn't it?
Yeah, it's the.
So, going back to the actual generation of the trial balance, working your way through it. Thinking about professional clearance. Going back to a previous episode where I said I asked for the working papers, I would have, when I was in my previous role in employment, I would have people come back going, it's all in Xero, it's all in QuickBooks.
Yeah.
And I'd go, you must have working papers. Now, if I needed to give professional clearance, touch wood, I haven't let anyone leave me that I needed to, I would be giving them the same response. It's all within QuickBooks. And people, I can imagine people's reaction if it's like, well, why? Well, this is why I think you need an element of working papers for the loans and whatnot and have them within there. And you would need to explain that as part of your professional clearance. There are working papers attached to the journals. For example, when going back to a previous episode about bookkeeping, when we're importing sales from other softwares, I will then attach the report when I put them in by journal. So having the attachments function within this software,
you're providing depth behind what you're doing.
Exactly.
It's when you do something. It's when you do something and there's no explanation. When you post a journal in and it's just a generic journal, which is a bugbear of mine.
With no description.
No description, but it's just a dressed up journal. And actually, it could be 900,000 one way and 889,000 the other way, but add another bit into it. But it's just rolled up. And there's no reason why that's there. That's the difficult point, and I think that it's just a bugbear of mine where I think it needs to be better because you need to see what it's about.
I think that I'm guilty of doing that when I was in employment, in the sense of you forget at the end of the process to go back and post the open balance adjustments. So you're doing it the following year.
Yes.
So you want to do it the quickest way possible. So you're having to do 2 draft balances and then you're doing the difference and then you're just posting in without a description, without this is the ins and this is the outs. We started to do a journal sheet and then code and post that.
We've got as part of the process of Engager where to complete the task, there's the journals other journals being in the system.
Yeah.
Obviously, really the only real journal of that is the corporation tax one, if there's any liability. And then
you can post that back, can't you?
But that's the thing. That's really the end one. But sometimes that does get forgotten.
Yeah.
No matter how. So that's important that part of the process we capture it, so we can literally lock the year end, and then we can go forward.
Locking the year end. That's a good reminder when people are doing their own bookkeeping as well. It's always been a thing. You start the year end account.
Yep.
And then a client goes back and posts something.
Yeah.
Damn, I've got to redo the accounts again. Lock it down. Lock down Xero. Lock down QuickBooks so the client can't go back and post anything. That's an important part.
So obviously we talked about the software, the process, pricing.
Yeah. So I spoke about this in Being Counted to Boss, the podcast. So I'd looked at, initially, I just took a third of what my employment was charging.
Yeah.
So I think it was, going back a couple of years, it was 1,500 quid minimum to do a year-end set of accounts. So I was charging people 500 quid. Doing myself a massive injustice at that point in time.
Yeah.
Because I wasn't doing the bookkeeping, I was doing a lot of year-end accounts prep work.
Yeah.
So then when I went on my own 18 months ago, that's when I looked at the local area.
Yeah.
See what people are charging.
Yeah.
And I've said in the podcast, my pricing's on my website, Hancock and Hastings. Feel free to go and have a look. At the moment, it's £100 a month.
Yeah.
Year-end accounts, corporation tax.
Yeah. So we are pricing. We've done it slightly different now. Where we have it's broken down so they can see what the cost to do the accounts and the tax returns. But actually, we have a separate line for advisory. Yeah. Because we're doing a lot of whereas before the price will cover the in-year accounting and tax advice you give. So we're just saying this is the element that to do the final bit, the compliance bit. But actually, we've got a line that stipulates we're actually doing in-year stuff. So that's when we'll talk about that when we're doing the advisory episode. But our pricing, we break it down slightly so they can see. So then they'll say to us, "Oh, okay, well, I might not want the advisory." Well, that's fine. It just goes into that one line as accounts and tax stuff. So it's staged. I'm saying it's the same price.
Okay. Well, how do you manage that if someone then asks you a question if they don't want the advisory?
Well, then we have to set up and say, look, it's
you've got to remember that they're not.
Yeah. So it's built into that actual price is actually still the accounts and.
Okay, fine.
What we're trying to say is we've just itemised it on the proposal and the engagement letter, so they can see that they're getting the advisory.
So, but if someone wanted to take the advisory away,
it just the accounts it just goes into that one fee. Yeah,
I get you. So it's going up into.
Yeah, I'm not just going to just do variable. No, because it's the same amount of work. It's the same amount of work, isn't it? We're just doing it at the year end. Yeah, we don't really do that anymore, but that's for another episode. And
yeah, I tend to my £100 a month for doing the year-end accounts corporation tax return probably isn't necessarily right now because I've got people that I do bookkeeping for and people I don't do bookkeeping for, and you're going to have different variations in work between the two. So having a fixed rate for doing that.
We got it in tiers. We call it tiers, and we're trying to capture it. And admittedly, we've had to tweak it a bit because some have grown, so we had to increase the price. Some have, their business has gone down a bit, which is a shame. So we've recognised that as the right thing to do. But with the accounts and the whole process thing, we try and do the year-end accounts 3 to 4 months after the year end. Yeah. Because it's just a compliance thing. If we want to build on and be an advisor, we need to make sure the compliance is out of the way. We've got the balance sheet to build on to help the projections. What about yourself?
I start the process maybe around 3 months as well. I've got some that are a little bit longer, and it's because we're waiting to get bank statements in. Yeah, trying to get summer doesn't necessarily help.
There's still some for us that still are 6 months away, 8 months when we aren't really doing the last minute filings.
No, if March year ends, if I'm doing them in December, it's probably because they're a new client.
Yeah, exactly, and then they're used to a service that they previously had accountants done, and now we've got to
you're catching up
and stuff.
And then you're starting a little bit earlier.
So when you do the year end and you do the accounts and tax, do you do a meeting? Do you just give them the accounts? Do you do a report? Or
I send them via e-sign, tax calc, for signing. And as part of that, I say, this is your profit, this is your corporation tax.
So you do a little bit of analysis.
Sometimes if I'm doing their self-assessment, I'll chuck that in as well and put this, and this. And then I'll say, get in touch if you want a meeting. Sometimes they don't because I'm talking to them about throughout the year. Yeah. I'm accessible to all my clients via WhatsApp. So if I'm talking to them throughout the year, I don't necessarily need a year-end accounts meeting in the traditional sense. And I think gradually I'm trying to move our model into a meeting with people quarterly. Yeah. To be in that advisory role. Yeah. I mean, we do the accounts, but very rarely so we just summarise some things because we've done a lot of the work in the year. So this is just kind of confirming what we kind of knew, or if there's a surprise, we are showing them where the variances come from. Was it an unexpectedly huge month of sales? Was it the fact there was a huge month of
unexpected costs, of course, then we're looking and going, is it a prepayment? Is it, how are we accounting for this?
Yeah.
Or an unexpected events happened, which we got to disclose, or do these sort of things. So for us, the year-end accounts and then the letter summary is it's gone.
Yeah. It's kind of, I think in summary, actually, we're using TaxCalc. We're still doing some working papers because obviously it's needed.
Yeah.
But gradually, the year-end accounts corporation tax is turning more into a compliance need to get this done rather than a mechanism for conversation.
Yeah.
That conversation is already happening throughout the year. And I think the whole profession is kind of moving that way to be
absolutely
more real time, have meetings more regularly with our clients.
Well, I think we need to. Technology is allowing us to do that.
Yes.
And if you're not doing that, then you don't really know what your client's doing.
No, and I think you might be left behind.
Yep, definitely.
Thanks for listening. We'll be back for the next episode shortly.